and welcome back to the Emperor BTC channel. Today's video is another market update video. Since our last market update video, we've exploded to 120k on BTC. So let's hop straight into the charts and see what I think is going to happen next. So if we just briefly go over the daily, I've mentioned it numerous occasions on the channel. We went from this range, deviation outside, hop back up, found significant resistance at this black line. We spent a considerable duration, well over a month, in this lower time frame range, just up below this resistance level, and then we have expanded out, hit 120k, even 103k, and since then have retraced to 116k. So in our last market update video, we discussed deviating from one extreme into another of a range. So let's look at this price leg on the lower time frame and see what's happening. So the recent retracement that's occurred from this 123k to 116k looks significant, but in comparison to the run up, it's only a minute retracement. So drawing my levels now, I think we have a huge key S&R level in this area, could even potentially be refined to here. So label this as a key S&R level. We have a couple of negative point controls, but the most prominent one is one right smack in the middle of this key S&R level, and then we also have another one just a little lower down. So with the key S&R level, just for those of you who might need refreshment, we had prior area of resistance, and even in the grand scheme of things, you could technically, as I said earlier on, like this area is refined, but you could technically say this whole area is a key S&R level. You had resistance, major resistance. So the idea is that if we do get down here, this area should act as support. Just naturally, because those who shorted in this area will look to potentially close losing positions. So if they got short here and they had no stop loss, price ran up here, they'll look to ditch them positions on a retracement. And then also you have to consider price as a reference point. Most buyers will look to maybe engage in price at this level because it's clearly an area of prior activity. We also have this price volume imbalance, which also would make sense to fill in. But I think this is a strong confluence zone. If you see a reaction and some volume to get in long, even back up into these areas. I don't subscribe to the fact that this is the top as of right now. As I mentioned, if we look at like deviation to deviation, we initially had this huge spike down. We retraced. See, we found resistance. We made new lows, and then we made new lows again. So even though you can consider this a deviation outside the range, we spent a huge amount of time outside of the range before we re-entered the range, and we made new lows on several different occasions. So if you flip that logic, we had a sharp impulse move to the upside. We could now retrace, get into a strong area of confluence, make new highs, even come down, make new highs again, and maybe drop back down inside a similar situation to what happened on the opposing side of the range. This is one of the beauties of time frames in trading. So if I quickly go to the daily time frame, you can see that it's quite evidently bullish. And then of course, if you go to the 1 hour time frame and you kind of home in on this side of the market, it could appear quite bearish. I mean, even if I drop down to the 15-minute time frame, it looks quite scary and quite intimidating. So in these sort of market conditions, it's actually quite beneficial to just zoom out and be like, okay, well, we've had an extreme run to the upside. We may see some downside now, so 2-3% retracements and a lot of red, and it looks quite scary, but in reality it's quite natural, it's quite normal, and wouldn't necessarily be a cause of any significant panic. So to just kind of summarize the video and kind of go back over the point that was made earlier on briefly, I think we've had this expansive price leg to the upside, probably caught a lot of people off guard, maybe some not so much. So I think you have a lot of eager buyers, and I think you might end up in a scenario where people will see price get down here and maybe move up a little bit, and you'll start to get longs entering the market at these prices. Then if you push price further, all these longs here have to puke their positions, or maybe they get stop loss triggered, or they can't hold a loss, or force liquidations, all the possibilities. We kind of end up in a low enough volume drop down into the confluence zone. I think this area is going to be huge, just considering how significant it's been in the past. As I mentioned, this black line is just a brief outline of the higher time frame resistance that has existed since December 2024. So it's well over 6 months longer holding. So I think when we get back down to it, it's going to be quite significant. So what I would say is to avoid rushing into any positions until you see price is in key area. And just before I wrap up today's video, I just want to give a quick shout out to the sponsor of the channel, Bybit. If you sign up using the link in the description, you get up to $600 in bonuses. So that's all for today's market update video. It's just a quick, short and sweet. I'll do a more in-depth version later on the week after price action has unfolded a little bit more. As of right now, I want to wait for my confluence zone. If price starts to move up here and I can get down onto a lower time frame and look for some scalp longs, so be it. But right now, for any significant swing positions, I want to wait until we get into this area and see if we get some nice confirmation to enter on. So if you enjoyed today's video, please leave a like and subscribe to the channel. Comment what your current opinions of the market are, and I'll see you guys in the next one.